Since early 2020, more than 500,000 cases worldwide have been registered. More than 25,000 deaths have occurred, and the numbers are still continuing to grow non-stop. The world is witnessing one of the most dangerous crises ever. Everybody is panicking. Hospitals are overwhelmed. Laboratories all over the world are racing against time to find a solution. Millions of people have been asked to stay in their homes all day long. The most dynamic cities in the world like New York, Paris, Madrid and Milan are empty. Millions of businesses have closed their doors and might never reopen. A great recession is knocking on the door, and it might be the greatest recession humanity has ever witnessed in modern history. And a lot of people have been asking us, what should we do? Should we buy stocks? And if yes, which stocks should we buy? And most importantly, when should we buy stocks? Have we reached the bottom or not yet? Should we leave our cash in the bank? Will they make a haircut on deposits? Should we buy real estate? Will we witness a real estate crash? Should we buy Bitcoin? Should we buy gold? We've received hundreds of questions like these. So in this video, we'll try to answer all of your questions in order to help you understand the mechanics of a crisis and make a better decision. So please keep watching this video till the end and take notes. And of course, don't forget to destroy that like button and subscribe to this channel if you haven't already done that. We publish a new video every Wednesday, so stay tuned. So let's start by talking about stocks. Because of the current situation, a lot of businesses have closed their doors, so most probably they will suffer from a decrease in their earnings. And when a company's earnings decline, their stock will follow. Take the example of McDonald's. Since the restaurants are closed, the stock share price of McDonald's went down from $217 on the 12th of February to $137 on the 18th of March. That's a 37% decline in only 5 weeks. That's a huge decline that this company has never witnessed before. The Dow Jones went from almost 30,000 to almost 19,000 within the same period. The S&P 500 index went from 3,400 to 2,300. Everybody is literally panicking and selling. Now, let's compare this crash with the subprime mortgage crash in 2007-2008. In the subprime mortgage crisis, the S&P 500 index went down from 1581 on the 10th of August 2007 to 683 on the 3rd of February 2009. In other words, the S&P 500 index took 18 months to go down 55%. If we compare this to what is happening now, in this crisis, the SP 500 index has already lost 35% in only 5 weeks, and that's incredibly shocking. It's one of the most brutal crashes the markets has ever witnessed, if not the most brutal. So, have we reached the bottom? We might be wrong, and we hope we are, but we don't think the bottom has been reached yet. Unless a laboratory surprises us somewhere with the discovery of an immediate cure. But as you all know, research and cures take a lot of time. So what should you do? Should you buy now? What stocks should you buy? In this period, it's good to analyze the fundamentals of a company, but this isn't enough because it's not the only factor that determines a share price. We should also consider human psychology, which is extremely important these days. Fear, panic and euphoria are sometimes irrational and can lead the market either way. So what we recommend to you is to stick to the basics and don't try to outsmart the market and buy stock because it's declined a lot and you've estimated that it won't decline anymore. Instead, ask yourself these questions. Will this crisis stay forever? Will this crisis change our economic system? Will our companies come back and produce and grow again? If you think that the world will continue to function normally in 6 months or maybe in 2 years, then you have to invest now, because stocks are at a discount. But if you think it's the end of the world and we'll never recover for the next 30 years, then you should not invest. For us, we think that humans will win this battle, and the economy will get back on the right track in a couple of years. So, that's why we recommend you to invest in index funds. such as the Dow Jones Index or the S&P 500 Index. But you have to use the DCA method, which stands for dollar cost averaging. So if you have $6,000 to invest, divide them into 6 parts and invest $1,000 each time the market drops by 5%. Now let's dig deeper. So what usually happens in these difficult moments? The government and the federal banks will inject money in the economy in order to bail out some big companies or in order to avoid a huge crash in the stock market. And you all know when they print money and inject it in the economy, it will cause inflation. Because if you print money, households will have more cash and more money to spend on goods. But if there's more money chasing the same amount of goods, the prices will go up. That's easy and simple economics 101. And that's why the Fed cannot inject as much money as they want. And here comes another problem. If this crisis turns out to be really big and lots of businesses go bankrupt and the Fed didn't inject enough money, what will happen is that the banks will have huge problems. To understand why, let's have a quick overview about the business model of a bank. So, banks receive money from depositors and then lend this money to businesses so they can grow easily or to regular people to buy real estate. The bank offers lower interests to the depositor and higher interest rates to the borrower in order to make money from the interest rate differential. So what will happen in a crisis is that a lot of businesses will go bankrupt and a lot of people will become unemployed. So a lot of borrowers will default on paying their mortgage. And if a lot of people default, guess what? The bank will start losing money. A lot of money. And if the government didn't help out the banks with enough money, well, guess again, the bank will take money from deposits. Like truly take, not even borrow. It's happened before in many countries and might happen again. This is what we call a haircut. Of course, if you're living in the US or in the UK or France, it's unlikely to happen. But it could happen, and this is why you shouldn't leave all your money in the banks. Another problem might occur during this crisis. A lot of people borrowed money to buy real estate, and during a crisis, many of them will default, so the banks will take their properties, and the banks will be left with a lot of properties. But they need liquidity, so the bank will try to sell these properties. The offer on real estate will go up, and there will be more offer than demand. And guess what, my friends? The price of real estate will go down, and we might witness a real estate crash. So, what should you do? If you hold on to cash personally, you might lose a lot of purchasing power due to inflation. If you leave the money in the bank, you risk a haircut. If you buy real estate, you might face a real estate crash. The future is unknown, and we can never predict it accurately. That's why we recommend to you to diversify as much as you can and always think long term. For example, do not leave all your cash in the bank. Withdraw some and put it in a safe place. Invest in index funds such as the Dow Jones and the S&P 500 Index, but always use the dollar cost averaging method we saw earlier in this video. You can also consider investing in Bitcoin. In fact, Bitcoin has a limited supply. There are only 21 million Bitcoins that exist. Nobody can wake up in the morning and decide to create more Bitcoin, like they can do with paper money. So there is no risk of inflation with Bitcoin. And there are plenty of things you can invest in during a crash. We've prepared a full video about this. Click here to watch it and learn what you should do during a crisis. What you do need to keep in mind is that this crash could be the greatest crash of all time. A lot of people will lose their jobs. A lot of companies will go bankrupt. There could be a real estate crash, high inflation, and maybe a haircut on your deposits. Yes, I know it's scary. But if you, like us, believe that we'll go back to normal life in 2 to 5 years, there is no need to panic. Just forget the daily fluctuations and think long term. Don't rush or take emotional decisions. Stay safe and invest wisely. And destroy that like button and subscribe to the channel if you haven't already done that. Before you go, we'd like to invite you to visit the description below, where you'll find many resources to help you make money from the comfort of your couch. You'll find the books that we recommend to help you acquire the right mindset for success, a free video course that will teach you how to generate passive income and how to create a 6-figure online business and much more. By the way, if you're still here while the music is running, here are 2 videos that you'll love watching. The first one will show you the one thing that rich people buy that poor people don't, and the second one will show you how to become a millionaire in your 20s or early 30s. Just click on either one of them on the screen right here.